Hey everybody, this is Bob from Trade Genius. We're going to go through a series of training events to teach you how to trade using a system that we feel is really good. And it's designed to put you in stocks at the right time, using the right time frame, and being able to catch high probability profitable moves. So just sit back and relax. It's going to be a series of vignettes, not very long videos each time, and we're going to build upon each indicator until we have the whole package put together. And once the whole package is put together, then we will show you different scenarios and explain how to trade each of those. So the first thing that you need to know about Trade Genius is that our default time frame is on the hourly chart, and that's designed for us to catch what we call short swing moves. And in doing so, you're in and out of trades over anywhere from 3 days to a week, depending on the market volatility or action. And then how we trade is that we trade based on looking at the market direction. We look at the intensity of the move around that direction, and then we look for what we call confirmations or divergences. And we're primarily looking at price action. And that's where the real secret is in terms of successful trading. So this particular video here, we're literally just going to start and talk about the linear regression channel. So you got to kind of know where you're going first. So here goes. So what you want to do is you want to go up here in Trading View, is that you hit this function X indicators and strategies icon. It's in the built-ins area, so that means it's freely available for all. You just type in the search button 3X, and then what you do is you go ahead and you're going to look for 3X linear regression, and you're going to go ahead and click on that. And then you exit out, and then you have a series of lines here in front of you. So what we're going to do next is we're going to go into this gearbox right here, which is basically the settings. This turns it, hides it, or makes it unhide. This deletes it. And so we're going to hit the settings, and then we're going to do a couple modifications to the default. So we're going to go look back period of 65. We're going to have standard deviations 1, 2, and 3. We're going to allow extend line. We're going to allow show Pearson's R. And then on the style area, we're going ahead and we're going to turn off 2 of the moving averages. And we're just going to leave 1 in there. And we're going to leave VWAP and we're going to leave labels alone. And then we're going to go back to inputs. And on that third MA, we're going to make that 144. And that's going to be important later when we do day trading. But I just want to have that set up for now. And you hit OK. And so now you have a series of lines here in front of you. You see the red line here is the center line for the linear regression. And then you have the standard deviation 1, 2, and 3. And the way standard deviations work is that when you look at like a bell curve, you heard that for grading and things like that, the market likes to move back and forth across the center line, and direction of travel changes over time. And so what you're looking here is that if something pushes down, one standard deviation, there's a 50% chance, 55% chance it's going to come back to the center line before going lower. And if it goes to 2 standard deviations, you're looking at 91%. You get the 3 standard deviations, you get to 95.5. You get my point. So when you get moves that push down hard against these standard deviation lines, is that you can expect that pressing your bet short is probably going to fail you, and vice versa. If it pushes up into 2 standard deviations higher, chances are it's going to come back down. The other thing that we want to know about the linear regression, and then we'll leave this video for today, is that this is the line called the Pearson's line. So it goes from basically 1 to 0, and it goes either up or down. In this particular case, they don't put a negative in front of you. You just have to kind of look and see that you know this is negatively moving. For the last 65 days, the channel has been moving down. And it's moving down at a 0.78. It's kind of like when you think about going up and down steps. It's basically the rise over run. And this is a fairly steep move here. So it would be considered an aggressive trend. And it's been aggressively trending down over the last 65 days. Every time, every hour moves on, this thing changes dynamically. So it's just giving you a quick look at direction here. And then the 144 is here. This is just a simple moving average. And it also, in many cases, people look at different moving averages as bull-bear lines. So we're not really going to talk about it here because we're going to use some different lines to determine our entries and exits. But I just wanted you to have this in place. So when we do day trading on the 1 minute or even a 30-second chart, that moving average becomes a support resistance area. Okay, but for now, we're just going to leave it. So what I like to do when I'm looking at different trades is that the goal here is to find opportunities that are moving generally higher versus, generally lower. And so if it's 0.3 and higher, it's a good stock to look for entries. If it's below 0.3, like this situation, is that you may want to wait for this to settle down to get a trend as your friend kind of a move, unless there's special situations regarding a particular stock, or in the case of a DHC like this, if you get these big hammer moves down, so they may portend an opportunity to basically steal at a good price. So that's linear regression channel, and then we're going to layer in some other indicators on our next video. Thanks so much for listening. Have a great day. Hey, good morning, everybody. Bob Trade Genius. The 11th of April, California lockdown 3 weeks plus 3 days. Over 110 miles of walking with the family, and a video for you guys. So the OPEC meeting on Friday was a bust. We have oil coming out of our ears everywhere you look, and the run up we had in oil earlier this week has faded, and now it's going to fall until we truly stop production through the markets. And also, President Trump talked about storing oil on tankers as well, and we have been bullish on the tankers of late. It looks like we're going to get our third chance at a buy, and these have been some really nice moves here with DHT, with our signal, and we have another one here that formed earlier in the week, and we're long DHT. You can take a shot here at EURN. We did a trade and got out on TNP. And that looks good too. And TNK looks good. There's a number of them. So this is going to be a great opportunity. These companies are going to be raising guidance. One of the few bright spots in the market. But I just focus on a couple of them. And, we had earlier in the week, we had a quick 5%. Actually 4% win on DHT. I'm still in it personally. We just traded out of TMP on Friday, and looks like we'll be jumping back in on some more tankers. And this is probably will have at least 60, 90 days of opportunity in front of us. So take advantage of it. And basically it moves opposite of USO. So when USO starts to get overbought, as you saw it coming down, this was the OPEC bounce, and then it rolled back over. I'm expecting USO to come back down to here, and I think it's going to be a tremendous opportunity for the tankers. And then I'll look to buy some USO. We caught this USO move last week, and time is flying. And we'll be back in USO again for these occasional hiccups. and make money off of it. Anyway, if you want to trade with us, make money with us, just look us up, Trade Genius, tradelikeagenius.com. We'll be happy to have you join us and help you navigate the treacherous waters that we're in today. You guys have a good one. Talk to you later. Bye-bye.